I thought you knew I had some help. Hey guys, Jim Ryder here, Fairway Independent Mortgage. Listen to a little Morgan Wallen, Post Malone. I don't know if you love this song, but I definitely had a lot of help to get where I am in business and in life, and I want to thank everyone out there. So let me do a little pause here so I can get down to business here. All right. So it's Jim from Fairway, as you know, and I thought that I would do a video about what's going on with interest rates because they've been going up basically straight up since September. So right around the election time, they've been going up. And a lot of people are asking me, like, is it because of the election? Like, is it because of Trump? Is it because of Biden? It has nothing really to do with the election. Rates follow. Basically, right now, it follows what's happening with inflation. So years ago, inflation rates were crazy. They went up to like 8%. So the government had to get their interest rates back down or get inflation back down to a controllable level. So you might say, what's inflation? Let's just say, example, gallon of milk is $1. Today, a year from now, they look at it and let's say it's $1.05. That means inflation's 5%. Okay, something's went up. Either the value of the good or the service is going up. Now, what the government wants is we want a healthy inflation rate of 2%. That means that every single year you make a little bit more money, prices go up a little bit, 2%. If it's higher than 2%, then the government, the only way that they can combat inflation, bring inflation and prices back down, is to raise interest rates. So it's a fine line of like, it's a balancing act. You don't want to slow down the economy with interest rates so high that it collapses the economy. So it's a balancing act. So anyway, let's move forward, okay? Right now, we have big indicators every single month that come out that affect interest rates, and what's going on is employment numbers or job numbers, okay? And we have CPI, which is, just say inflation, how much prices of goods and services are going up. So today was big news. Every month I'm going to try to do this, right? Because it's once a month this data comes out. And this morning, Steve Leishman from CNBC came out and he just was mentioning the interest rates have gone up to a high of, since June of this year, mortgage interest rates are above 7%. They were as low as 6% in September. So to go up 1 full percent from middle of September till now, it's a big jump. So keep that in mind because I sell mortgages or I help people finance the houses. So having a higher interest rate would kind of deter someone from buying a house because the payment might be higher than what they really want. So let's get down to business. Today, the news came out, okay, for jobs, and there was 250,000 jobs created last month. That's higher than expected. So that's not good for inflation because more people that have jobs, that means that there's more people out there or families willing to spend more money on whatever it is. So supply and demand. You got more jobs than expected, more people making money, more families making money. They're willing to spend more on whatever they want. Okay? The only way to kind of slow that down is to have the job numbers lower with less people working. Believe it or not, even though that's crazy, less people working, meaning there's less families and individuals willing to pay the higher prices. And if they're not willing to pay the higher prices, then prices tend to come down a little bit from whoever's selling or goods and services. So that is the job numbers that just came out this morning, and it is not good for mortgage interest rates. And you'll see that the stock market went down too because stock market likes lower interest rates. When rates go up, the stock market does not like the higher interest rates. So not to be a Debbie Downer, but I want to give you the straight news, what was going on there. Now, there's always a silver lining. So let's talk real estate now. Because I sell mortgages, like I said, I'm a real estate direct lender, but I also have owned 15 or 16 houses in my life with all different interest rates and all different price points. So if you're a home buyer, when rates go up, okay, it might be easier for you to actually buy a house. And let's think about it, okay? So right now, in my county where I live, New London County, Connecticut, there's about 2,500 active listings or houses for sale. A healthy, normal market there's around 15,000 houses for sale. So think about it. There's 2,500 houses for sale in this whole county. In a healthy, normal market, there's 15,000. So what does that mean? It's tough for buyers out there. There's a lot of buyers, not as many houses. Now, when interest rates go higher, there's going to be buyers that say, well, I'm priced out of the market. I know I can buy the house. However, I don't have enough disposable income afterwards, so I don't feel comfortable buying the house. So they back off and they stop looking around until rates maybe come back down. The advantage or the silver lining right now is, as a buyer, you can go out there and shop for a house and you'll have less competition, meaning you'll most likely get a better offer, a better deal on the house. Now, if you've been looking for 5 or 6 years at homes, you'll remember 3 years ago, 2 years ago, there was so many multiple offers. If you had a house for sale, you'd have 10 or 20 offers on the property. And the offers were crazy. People were offering $50,000, $75,000, in some cases $100,000 over the actual asking price. That's not really happening so much right now. Okay, so you have the advantage, the silver lining, less buyers, meaning if you're a buyer, you have less competition, and you have a better opportunity or chance of having your offer accepted and buying a house at a decent price. Okay? Now, if you're a seller, now would be the time to sell because there's not a lot of houses for sale and you'll probably get top dollar. Okay? So, just wanted to throw that out there, give you a little information on this jobs report, the information that came out this morning from, like I said, CNBC with Steve Leishman over there. So if you're looking to buy a house, okay, it's important to get approved, like fully approved, not pre-approved. So a pre-approval, if you think about it, right? If you don't know what a pre-approval is, or even if you are pre-approved, I'll give you a Cliff Note version. You call a mortgage person or you apply on a website, you give the information. They look at the information. They might look at a soft credit pull or a hard credit pull, and they give you a letter within an hour. They're not verifying really much. Okay, they're just doing a preliminary review. And if everything looks good, you'll get a letter from the mortgage company or the loan officer saying you're pre-approved and now you shop for a house. Every buyer has that. You're not special. There's nothing special about your pre-approval versus someone else's pre-approval. Now, I do have a way in something different that Fairway offers. It's called a Fairway Cash Guarantee. And basically what that is, you apply, but you upload all your documents, okay? And I will take your application, look everything over, and if it looks good, I'm going to actually create a real application. But because you're looking for a home, there's no address of a house, right? You don't have a house you're buying yet. You're still shopping around. I'll put to be determined or TBD in the address. And then for the price of the house, I will look at your information and determine what your maximum is, right? So even if you're looking at a $400,000 house, but you're qualified for a $500,000 house, right? I'm going to send you an application with $500,000 on there. You're going to sign it. I'm going to give it to my actual underwriter, and your underwriters, they're going to do a full underwrite, like the actual underwriter, okay? They're going to do it, and it doesn't cost a nickel. We do it as a service to our buyers, and I don't know any other companies that are going to do it to this extent. The underwriter will review it. It takes about 2 or 3 days here at Fairway. They're going to offer or issue an approval, okay, an underwriting approval. And a lot of times after the underwriter looks at it for the first time, there's going to be questions, additional documents that the underwriter might want from the buyer, you as a client. You're going to work with my processor, Nina. She's going to collect the documents. We're going to give it back to the underwriter, same underwriter, and that underwriter is going to clear those conditions. So now, you've now went through the whole mortgage process, right? You don't have a house under contract, but the whole mortgage process is complete. We're then going to have legal look at it. We have called a cash guarantee department. They're going to review it, and as long as everything looks good, we're then going to issue a letter stating that when you go under contract and a seller accepts your offer, if anything happens, God forbid, Fairway will still buy the house cash. Okay, so we're able to not only do a basic pre-approval, which I can do that also very quickly within an hour, okay, because we're a direct lender, but I can also take you to the next level, okay, of a cash guarantee where your whole mortgage is completed and all you have to do is find a house. We'll do an appraisal on it. We'll order title through the attorney, make sure it's a clean title, and you're closing. And we have closed those type of loans in as little as 7 days. So thanks for watching. If you're looking for a mortgage, I'd love to help you out. I have a whole team behind me. We're the second biggest national lender in the country as far as independent lenders, Fairway Independent Mortgage. And we'd love the opportunity for my team and I to give you guys a great deal. So now actually here's a client calling. So I have to run, but thank you very much and I appreciate it. And I'm going to grab this. Hi, how are you? It's Jim. What's going on?